Okay, apparently we're live. Fantastic. So why am I doing this live stream? Well, the reason I wanted to do this live stream is to have a chat a bit about what's going on with the crypto market first, and then also have a look at what's going on generally in the markets, and how is this whole situation, inflation rates rising, the war in Ukraine, well, especially inflation rate rising, which is an indicator of turmoil in the markets. And why is that the case? Because of many different reasons, as we will see, the pandemic and so on and so forth, and the war in Ukraine, and turmoil in the Euro-Asia area, and also the fall of Bitcoin and such. So let's try to have a general chat about, number one, what's going on, and number two, why is it happening, and why is there such a waterfall effect on the economy that we're living in. So first of all, Bitcoin. What's happening to Bitcoin? Bitcoin has been dropping down over the last few days. Over the last week, it's been dropping considerably. This hasn't happened as of yet. It reached a lower high, and you can see that the high, a lower low. And if you think about it, which point are we at? We are at the point of 2020, so at the beginning, at the end of 2020. And then if you look even further back, you can see that we're pretty much reaching a level of what was at the highest high of about 2017, which is when the hype around Bitcoin really started out and really went up to the roof. Lots of investors are losing plenty of money. We're talking about billions and billions of US dollars worth in Bitcoin. We're looking at the levels of inflation rising to a much higher level that we're used to. I am in the UK, and I can show you the charts for UK, and most importantly, instead of the UK, which is going very high, you can also see the level of inflation in the European area. What is inflation? I'm not gonna talk too much about what inflation is, but we know that inflation essentially measures the cost of living, in a sense. So the higher the inflation, the higher is the cost of living, the higher it is to borrow money, and the more difficult it is to put up to make good investments, because that means that if inflation is high, then essentially the expected value of most investments is going low, because investments is given by the summation of inflation plus the expected market value on top of the inflation. So it's a combination of two. So the expectation of the market going up, it's very low because inflation is very high. So how do you deal with that? That's a real big issue, especially when inflation rate is high. It's high on most of the world economics. Why is inflation going that high? And it's been going high. It's increasing since around the start of what? Well, the start of the pandemic, in a sense. It sort of went down and then it sort of spiked up. It started to go high. And interest rates have followed. So interest rates follow inflation. Inflation is something that we cannot really control. It's something that is naturally given in the economy, and it can be sort of regulated or maneuvered by monetary policies and monetary and fiscal policies by all the governments in the world. Of course, some governments will make things will have a much stronger take on the economy. For example, the US or China, these big economies, which therefore are affecting also all the economies around, satellites to it. So that means that Europe is also it's making large businesses are dealing with the US economy, and so they all get affected by this, because the price of the cost that they're facing, the cost in the US is going up, so the expenses are higher, and so everything sort of goes up as a domino effect. But Bitcoin is going down. Bitcoin is going down, and this is an effect of the turmoil that it's coming in. We have the war in Ukraine and the war turmoil in Russia and in Ukraine, which affects the entire nations around it, because we know what it is. The exports in petrol and gas have risen. That means the cost of living are high for most citizens, for all the people that are living in the Western countries, which essentially buy important chunks of their primary materials from Russia and such nations. So you can see that the spectrum of inflation is going high. Obviously, we have economies in which the inflation has been high for a long time, but we also have economies for which usually inflation is not as high. Look at a country like Canada, for example, or even a country like Singapore, where the economy is quite stable. It's a rich country, but the inflation is still rising. It's rising proportionally in all of these countries. And if you look at a euro-based area, you can see that inflation has gone up to 8%. Just few months ago it was about 6%. Now it's increasing even more, and it's going to increase more. I mean, that's my opinion. It's going to rise even further, and you can see the spike if you look at the chart over 25 years. That's quite insane. So what's happening in the crypto markets? It's not really. I'm not really organized in what I'm saying, but what is really happening in the crypto market? Why is the largest cryptocurrency crashing? I think that the reason why Bitcoin is ultimately crashing is because people are fearing interest rates going very high. They are fearing the. I will probably think of Bitcoin as sort of an index to how people are feeling about risk. Bitcoin is a very risky asset, therefore it sort of attracts risk non-adverse investors, or risk-seeing investors. So if Bitcoin starts to go down, that means that many people, especially the big investors, are starting to sell. Why are they selling? Because of the state of the economy. The economy with very high interest rates, with low chances of good investments anywhere else, or anywhere in the stock market. And when the stock market is crushed, if you look at the real estate investments, these are also going down. The price of the houses is going down. Mortgage rates are going up. So where do we put the money? Well, we don't put in risky assets such as Bitcoin, and that's why it's crashing. That's why I believe that the Bitcoin market, the crypto market, is going down. Of course, because many of the crypto coins are actually based on larger networks like Bitcoin and Ethereum. Of course, when these two go down, and the rest follows. Look at what happened to Terra, which was essentially based on a huge bet against Terra going down, done via Bitcoin, which was part of the reserves that were stabilizing the assets in the same network. So so there's no way back, really. We were thinking that Bitcoin would have been a safe haven. It's never been a safe haven. People think that it was, and you can put the money in and it's going to go up, it's going to beat inflation. Well, it didn't beat inflation. Actually, if you look at the price of Bitcoin, it hasn't been beating inflation for a long time. It's been going down for the last few years. If you look at the returns per year of Bitcoin, it's actually negative over the last 2 years, since 2020. So definitely has proven wrong to be a safe haven against turmoil and crashes in the market. Even gold, same thing. Gold is a less risky asset. It's less volatile than Bitcoin. Bitcoin is a very volatile asset. So hence, investors that do not believe that the market is going well are going to take off their money from risky assets. That's always been the case. If you look at the crisis in 2008, if you look at the crisis in 1987, if you look at the crisis of 2013, same thing. People, when they fear that the market is going down and it's not going well and there's no potential investing opportunities, they will take off their money from risky assets. That's how it happens. Vice versa, when people start betting too much on risky assets, look at 2008, then there's going to be a big short, a big crash later on, because people start selling like crazy and they panic sell, and when they panic sell, you get a crash in a few minutes. So yeah, this is essentially what's happening at the moment. So when people think of Bitcoin as a store of value, no, it's not. It's not a store of value. It's something that goes down because it essentially, it can be shaved inside of a risk index or a risk-seeking investing index. It's one of the many that has been crashing, just like Tesla stocks or any types of stocks in any stocks in the tech industry. People bet on them thinking that they're going to go up, but actually when they smell that the market's going down, they will take off because they need savings. They need to get to pay the houses, the rents, they need to get food, they need to pay daily expenses, and as well they need to save them somewhere safer. They need to get a safer asset. So where is a safer asset? Safe havens? Maybe. But they need to hedge themselves against inflation, and the worst thing that you could ever do is to hedge yourself against inflation using very risky assets. You don't do that. You just don't do that, and that's what's happening now. I'm not going to delve too much into the characteristics of how much Bitcoin has gone down and what's going on and so on and so forth, even though there are some really good news about investors for Bitcoins. For example, I read here where Argentina is embracing cryptocurrency. Argentina government is essentially doing the same thing the Venezuelan government has done, or even Russian government has done, to hedge themselves against high inflations, with the thinking that they could use crypto in order to hedge themselves against high inflation, because in Argentina, in South America, we have very high inflation. We're talking about on the order of 10%. Inflation rate, so 20-30%. In Venezuela you probably have something like 70%. If you look at it, Argentina 60%. That's it. There we go. 60% inflation rate is just killing you completely. It means that every year you essentially see your funds going lower than half of their value. It's a real problem. Okay, so what's happening is, again, I'm going to repeat myself again. People, when they fear that things go bad, they do not like volatility. They do not like risk. They would rather put their savings into a saving account on a bank and wait for that inflation to drop their value. Vice versa, that is when the inflation rate is high. But when it's really, really high, think of Venezuela, then investors are probably prone to actually take more risk because there's no way around it. So actually, the large investors that probably deal with Venezuelan currency or the Russian currency, when you see the ruble just dropping down completely, you got the inflation rate going to the moon, then obviously risky assets are actually easier to invest on. Because at that point the proportion of risk is so confused that there is no way out. It's sort of like a last try, a last sparkle of hope to do that. So cryptocurrencies in that sense could be the same thing. If you know that over 1 year you're going to lose 70% anyway, what's the harm in trying risky assets? So investors that are holding crypto probably are coming from these types of countries where there are the poorest countries in the world, countries where the level of risk in the currency itself is very high. Think of Venezuela, think of Russia, think of Turkey, countries in turmoil, North Korea, and so on and so forth. So they will use cryptocurrency for that. But conversely, countries where the inflation rate is very high, it's going up, but again, it's not as high as it could be. There is a limit to what people are able to suffer, and they will not put their money in crypto. They will want to search different types of investments. They would rather see their funds go down by 10% than to put them in crypto because it's too risky. Together with that, there's also another important concept, which is the fact that just recently the Russian economy, whereas originally it started to incorporate bitcoins, now they started to regulate, and they froze the accounts of many investors, like it happened just at the beginning of the war. So this also led the crypto market to collapse. I think in terms of the crypto market itself, aside from the market, but in general, I think the crypto market really started tumbling down once the Terra situation kicked in. That's where really, and sort of that's a domino effect, right? Because when that happened, that led, in such a difficult environment where we're in, it was a message. It sent a message to all investors. They said, this is not what you thought. This is not stable, as the name would say, stable coin in the realms of the Terra network. This is actually backed up by really risky securities, which are bitcoins. So if somebody wants to manipulate the market, they can do it effectively because nothing is regulated, it's decentralized. And that's essentially what happened. So it gave a message. It said, you cannot bet, you cannot think that this crypto thing that we're building is actually very strong, and it allows for people to believe in it in such a way where it could be similar to gold, which is a safe haven. It's not the case. People can manipulate it, and your money is going to disappear in no minutes. Okay, so that's a first message. What happened afterwards is that people started looking at that and they started panic selling. They started panic selling all their crypto because of inflation and all that I said just before. Inflation rate just went up. I think the U.S. Fed rates new was shortly after the Terra collapsed, and also in the UK, same thing. When they came up with the 10% inflation rate, people started selling. Same thing, Bitcoin, all the crypto. So that started panic selling. People started selling again, and the price just went down. Because why? Well, we know why. Because the price of Bitcoin is just given by the laws of the markets. So demand and supply. The lower the demand, the lower the price. That's essentially what's happening. So yeah, this is generally the reason why you have such turmoil in the crypto market. I also went into this website crypto news and just started looking at a few articles. One of them being U.S. Fed to blame for downturn. Large crypto players have responsibility towards ecosystems, which essentially says that actually, the reason why crypto is going down is due to one of the reasons is the U.S. Federal Reserve, because increasing interest rates in an aggressive bid to combat the rising inflation has led to a recalibration of expectation of risk. That's essentially what I said. So inflation rate goes up, people will think in a different way, and they will look at risky assets, and they will not look at them in a way where it could be a good investment, worth the risk. It's not worth the risk anymore. The risk appetite is going down. People start dropping that, and they don't want it. So my friend finds the crypto business as an exchange of responsibility to strive to contain the losses. Of course, obviously the Fed will say the opposite. We're not the ones that we did this. Obviously, we're just thinking about our country and how to deal with the current situation. The CEO did not specify whether it stepped in during the crash of it all, and just provided an example for 2021. Last year, hackers targeted Japanese crypto exchange Liquid and stole close to USD 100 million worth of crypto. Yeah, of course, that's what's happening. So this is an interesting thought, but really, I think generally the only thing that I got from this article, which is very true, is the fact that rising up interest rates will lower the risk appetite of people. Well, that's not their own. It's not the Fed that is that is to be pointed at as the reason why we have such turmoil. The Fed just thinks about stabilizing its inflation, trying to mitigate the market conditions, and hedge their financial collapse. So there's nothing against crypto whatsoever. Actually, probably some of the Fed guys, as much as other nations such as Russia or Venezuela, were probably thinking about Bitcoin as a potential resource in a long or short-term situation. So first short Bitcoin ETF is so this attracted me because it really does tell you what is going on in the markets. People are getting creative and start using the collapsing crypto as a way for hedging themselves. So these large funds that are selling ETFs, which are basically shorting the crypto market. That's a very good, creative way to try and hedge yourself against the market conditions. You probably have already invested in Bitcoin. They will want something to hedge themselves against it. And it also tells you what's the direction of the market at the moment. So the sellers, the market makers, are creating products to go against the Bitcoin hype, and that's absolutely understandable. Another of these articles, about Elon Musk, of course, just recently tweeted that interesting tweet. I'm going to support, I think he said something like, I'm going to support Dogecoin. Dogecoin is a cryptocurrency that really seems dead. If you look at that, if you look at Dogecoin, you can see that it sort of really was not attractive at all. When I looked at it, it was spiked up in 2021, always because of Elon Musk and other investors, but now it's sort of dropping down. So I don't really get this article. They're saying Dogecoin is weekly bump. Yeah, sure, there's a weekly bump, of course, because it's Elon Musk and people just buy or sell depending on what he says, because he's got lots of power in the financial markets. But it's sure jumped from 5% to 5.8%, but this is not saying anything. It's just, you could generally, like, as soon as he tweeted, you could have bought Bitcoin Dogecoin and makes a little profit, but I mean, you look at you really look at that, what you would get is just 5%. It's just the same thing that you would get out of at this point. You might as well just go for low cap stocks. So this is generally what I'm thinking about. I'm thinking about the markets and how these are being are moving around during such period. What is going to happen to Bitcoin? I cannot say anything about what would happen to Bitcoin. Generally, I wouldn't be able to tell you, and I shouldn't. But what I think is that even though we do live in such a turmoil, we do live in a very bearish market because of what's happening. I think we're gonna get out of it. And when that happens, I think the price of Bitcoin is going to go up. Now, when that's going to happen, that I don't know. But if you look at the chart, I wouldn't start buying now. Just wait a little bit and see. Maybe I think where it's going to go, it's going to go maybe around this area. But I might be wrong. I might be wrong, and it might be coming up. But I think that this sort of trend of Bitcoin just going down has been going on for a while now. last time. You could probably see this here, 2021. Yeah, it goes up, then it reaches this high in 2021 in August, and then it starts dropping. Look at what's happening during the war. The war started around this time here. It went up because of Russian investors and investors generally trying to hedge themselves against high inflation in the primary affected war countries, Ukraine and Russia. But then shortly after that, that's when the Russian government started creating positions against freezing citizens' accounts that would then lead these investors to drop their investments as much as possible. And that's where we get to at the end of the day. So we then get to the fall of Terra, which is about right here. That's the drop of the Bitcoin value, and then we have a larger drop right here. Why? Because of panic selling. There is some resistance here, you can see it, but I think it's gonna come further down there and then drop again. Is Bitcoin dead? No, it's not. It's not dead. I think it's got power. It's still the intrinsic value in Bitcoin. There is intrinsic value in Bitcoin in the way that it's been constructed. I'm not going to talk about it too much, but I do believe that, as I said already in a previous video, Bitcoin has intrinsic value, and I think that academically speaking, the academia does not have the slightest idea of what intrinsic value is nowadays, because they are tied to very old concepts related to stocks, shares, dividends. Today, intrinsic value is something that is completely different. It's not anymore what it used to be, and I think that financial institutions and academia itself should take that into account. Intrinsic value is also the utility that something has. Does gold have you often see people saying Bitcoin is like gold, is the digital version of gold. It is absolutely not. It doesn't replace gold. It's not the same thing. Gold has utility in nature. It does have utility in electric chips, and it's used amongst different types of for different types of reason, also for construction and stuff. It's an important metal. What is a utility? If you dropped off all the reasons why gold is important in nature, you would just leave yourself. Well, the highest portion of why gold is important is actually because people give it value, though. Why they give it value? Because it's nice, it's beautiful, it's shiny, and it's a really strong metal, just like silver is in a shorter, in a lower way. So, as we would say, it's a milder way. But gold is important because people give it value, and they have been giving it value for a long time, because humans have found that gold, first of all, it's rare, it's finite, it's not infinite, it's finite, it's it's scarce. That's why it's important. It's got value, and also because it's beautiful, it's shiny, and you can create, of course, jewelry. That's why now it's got worth of value. And it's been jewelry for a long time, so it's never gonna it's not gonna end its value as part of being a jewelry. That's for sure. Why Bitcoin though has intrinsic value? Well, Bitcoin has intrinsic value because of the utility. It's finite. It can be used as a form of transaction, and people give it value because that's been used to essentially get outside of the centralized way of doing finance. People can transact it freely, in a decentralized way, and that's why it's important. So the utility of Bitcoin gives it the value that it has. It's not just the hype. Of course it is the hype, but even gold is given by the hype, because people want gold stuff. They want shiny stuff that is fixed on their earrings or whatever it is that they're wearing. So that's why that's what that is. The gold it's given by also the luxury, the feel of being luxurious. People want to give something that has a feel of luxurious, that it's finite, it's scarce, and if you have it, it's worth more than normal metal. Bitcoin doesn't have it, but again, as I said, it's got utility. So intrinsic value needs to be revised. That's my opinion. Ethereum. Ethereum, we know that we are in a moment in Ethereum where we're going to drop to 2.0. It's coming in a while. We're still not there. We know it should be coming at the end of the year. Ethereum 2.0 will be resolving a few of the great issues that Ethereum has always had, and has taken lots of investors away from it, especially the gas fees and such. I'm not going to delve too much into the 2.0 and why that's important, but generally speaking, what I think is that if you were thinking of buying crypto, which I wouldn't recommend right now, but once the market reestablishes itself and once the ghost of inflation is off, which might be taking years, I think it would be a good time to start investing also in Ethereum, because it's going to be an important asset. Why? Because that has, again, intrinsic value, because it's got utility. Why does it have utility? Because lots of networks are based on Ethereum. That gives it utility. So that means that if people are buying and using blockchain-based assets that are based on Ethereum, they need to buy Ethereum to do that, and that creates value in Ethereum. That means they bring liquidity in Ethereum. They bring by the law of demand and supply, the more you buy, the higher the value. Okay, so that's why Ethereum is going to increase. Why? Well, as I said, because of the networks that have been forked within Ethereum, but also because of the gas fees that are going to be reduced, which is going to attract investors, and also, most importantly, the fact that Ethereum, out of all of the networks that have been forked in it, actually also hosts the capability of using and buying NFTs. And that's a big thing. It's not a huge thing, as many people think, because of NFTs, Ethereum is going to go up incredibly because it's so important. No, but it definitely gives it an important spice. So, which Bitcoin doesn't have. So, should you buy Bitcoin? Should you buy Ethereum? I think Ethereum will ultimately at some point become a very solid asset. But let's not forget that Ethereum does have a huge issue, which is that it is in